Trading Market Technicals morning call video for Tuesday, May the 7th. Yesterday was more of a pause inside day. Markets really just kind of digested its move from Friday on the non-farm payroll report, the better than expected non-farm payroll report. S&P up 3, gold down 6, Dow down 5, Nasdaq up 14. At one point, the Dow was up about 28 or so points. So again, still bullish. Market is pausing, to be expected, and we want to know, where do we go from here? What is the anticipated next move? Well, it's a little hard to say, because I think today will be a big day to really realize, okay, are we breaking higher? Are we moving higher? Or are we due for that pullback that we're looking for? And really, it's going to be. This is a tough call, but I do think today will be an interesting day. Now, we did put in a small doji candle, if you will, on a lot of the indices. Now, the transports actually did quite well yesterday, but again, that played a little bit of a catch-up from the other sectors that we follow. So we could be in for a bearish pattern on the candlestick today if we do break lower from today's low. And that would maybe mark a top in the market, at least in the short term. I wouldn't say it would be a top in place, that now we're starting down a bigger correction. We are in a seasonal time of weakness. That does not have to happen, and I keep stressing that's why I'm never calling the short the market, because we don't know where the top is, right? We were talking about a top a month ago. We were talking about a top 6 weeks ago, and where a lot of other services and newsletters pointing out that, yeah, the top was in, and I do know because I do a little research. We don't do that. We look for price, and price tells us where the top may be in place. In anticipation of a top in place, by letting us know that, hey, you know, our indicators have rolled over, we're making lower lows and lower highs. In this case, our indicators are way overbought, again, not a sell signal, and our price action is moving higher, making higher highs and higher lows. That does not tell me a top's in place. That tells me we have a big, strong bull trend in place. Now, for day trade is a little bit different, right? You know, we want to see a little bit of volatility. Volatilities are at historic lows, and a lot of the ETFs are moving instead of individual stocks. Now, if you trade ETFs, that's great, or if you trade large big cap tech, that's also good as well, because at least you're finding some volatility, where a lot of regular stocks that are anywhere from $5 to $50 have a little bit, they move, but they don't move as quickly or like to have price movement follow. But anyway, that's what we have to deal with intraday, looking for opportunity. And also keep in mind, you know, when you're at these lofty levels, at any given time, someone can hit the sell button and the market start to roll over. So just want to give that little frame of thought here. Okay, so now just wanted to show you, this will be a quick segment, guys, because nothing has changed. I just want to show you something on the charts here when we get to it. Our NYMO isn't overbought as of yet. A break above this area, this red line, will get us over an overbought territory. We could be that today. We were looking for a pop and drop yesterday. Never happened. So the market just kind of grinded sideways, slightly up to grind sideways. So it really was a ho-hum day yesterday. Take a look at copper. Copper did manage to pause again at the upper end of the range, so that is quite bullish. I haven't seen a candle like this in copper, and I was looking at it last night. Way back, I still haven't seen it. I think this was one of the largest moves in copper, if at all the largest. And take a look at gold. Gold is holding in there at that 200-week moving average. So keep an eye on that 1444 area. Again, if that is breached, and this will be a good sign that we might have also another correction in place with equities as well. So just keep that in mind. Watch that copper and watch the precious metals, especially gold here at the 1444 area. Right now, it's only the first day of the new week, so there's a lot of time left between now and the end of the week to see if this is even get to it or does it break lower. So that's going to be interesting. Lastly, take a look at the VIX. Again, nothing going on. But again, guys, remember, I would have expected a VIX to move something like this, something like a big red candle, you know, lower. But as you can see, it's not. And again, I mentioned yesterday, I think the options market is pricing in a little bit of fear because I think we would be lower. We would be somewhere below 12, but we're not. So we did lose again a little 19 cents on the VIX yesterday. But just keep an eye on that VIX because if it starts to move up higher, at one point in time, you have to say, listen, you can't buy the market again up 10, 11, 12 days in a row. I mean, it's a little bit unheard of. But again, if you don't think the markets can do it, it usually does. Remember, everybody's looking for something. It goes the other way. The markets are made to cause the most pain to market participants. All right, now let's get into the chart. So here we have the S&P cash, and I have a bunch of support levels here for you guys to watch and write down. Now, we have this large engulfing, and then we have this slightly up candle. So today will be important. Below 1614 and we break lower, we'll put in a bearish pattern here in the candlestick charts, and that will be the S&P cash. Same thing with this. As you can see here, we had a nice big move up on the spiders, and now we just have this little little green candle, little spinning top, if you will. A break below that, 161 and a quarter, and we have a red candle down. That'll give us a nice little bearish pattern in the candlesticks on the spiders. And as you can see here, just to show you what type of day that we were having, pretty much neutral, nothing going on. We're still below the opening low of Friday, which was 161. That was also main pivot. And again, guys, kind of stuck here in the middle. We did break out a little bit, but then and managed to sell back off again. So no movement at all in the markets yesterday. Really tough to find some opportunity. There was opportunity, but as you can see here, same thing on the 30-minute chart. Bollinger Bands are pinching again. So if you remember, we said Bollinger Bands are pinching, guys. Watch out for a larger move to come. And sure enough, we got it. Now we're pinching again. So looks like energy's building again for the last 2 days. We'll see what happens from Friday and Monday's price action. And same thing here with the IWMs. IWMs had a decent move off of Friday, but again, guys, sitting right above this line, really hasn't moved as much, and we're still underneath Monday's Friday's high. So we need to see it break below Friday's low, and then we could see the market start to move lower. Same thing here. Transport did play catch up though. If you notice, look at the two big candles. Now we're back at the upper end of the range here. Still in this large sideways consolidation. I'll just take that out. You can see what I'm talking about. So we just really consolidate. Now this is quite bullish though. If you see this, markets are overbought a little bit in our indicators. Not as much as the MACDs, but if we're moving at the upper end of the range from this large move from November, we could easily start to break out. And if the transports break out, then I think you'll see the other sectors follow as well. And let's take a look at the diamonds. Diamonds haven't done much other than a big pop up. We got two gravestone doji, regular doji candles. So we got a couple of indecision candles from the move on Friday. Let's see where this Dow takes us. It has been strong, as you can see here from the beginning of the year. We have actually mustered a big move up, and we continue to trend higher. So a lot of money going into the big cap Dow brick and mortar stocks here, the Dow 30. And let's take a look at Goldman. Banks had pretty amazing. Banks had a big move up out of nowhere. We had some weakness from all week last week. Even on Friday, the move wasn't so great. They sold off, and all of a sudden, out of the blue, everybody buys the bank. So it's just there's no reasoning behind a lot of these moves, and it's quite frustrating when you're looking at something saying, all right, well, if the banks are weaker, we're going to look to get ready to, and all of a sudden when you're starting to like the banks to the short side, boom, all of a sudden the markets tell you otherwise. So which is good because you're not jumping in. That's why we always need to have a reason behind it. So if you're looking to short it, let's get a trigger and take the previous day's low out, and that's what did not happen. So you don't look to short the banks, and as well as Goldman. So Goldman here all of a sudden now breaking this downtrend line. Now let's see what happens. Is it a one-hit wonder, or do we roll back down again? Let's just keep an eye on that. And that's the banks. Here's the XLF daily chart. As you can see, this bearish rising wedge that was in pretty much all of this whole year has now broken out of it. Okay, we did have the as you can see here, broadening top formation that we're above it, and now we're just about breaking out of this. Let's see if this area here holds and we start to roll back down again. That'll be interesting in the next couple of days. Here's Apple, another big day. Apple has goes ex-dividend on the 9th. That's a couple of days from now on Thursday. Also had a positive article making the Fortune 500 list, so we had a little bit of euphoria buying. I think that Apple is way stretched. I would not be looking to buy Apple here. Again, for a day trade maybe, but for if you're looking to put some positions on, wait for a back test, guys. Wait for this market to come back in again. At least 440, 420 would be a great opportunity. 425 would be a great opportunity to anticipate and look for to initiate a long position for a trade. And if it breaks below it, then you get stopped out. At least you had a good shot at it, but not up here. I mean, your risk reward is going to be, it's just not worth to be looking to buy Apple up at these areas. Again, only a day trade. And lastly, of the Qs, I think that technology did fantastic. However, it is extended here. We are way on the outside of the Bollinger Bands. I would not be looking to buy Qs here. Again, wait for a pullback. Logically, there's plenty of time. Again, patience is needed in this market, and if you have enough patience that you can work these orders properly and wait for your order, wait till a lot of these stocks and ETFs that you're looking to buy comes in your buy zone, you'll have that much more success in the markets. All right, guys, that's pretty much it. So let's see what happens today. Today will be pretty important. Remember, we have lack of economic data coming this week, so it's all going to be pretty much based on technicals. Keep that in mind. Have a great day, guys. Enjoy your day, and look to talk to you tomorrow with another update. Take care.